Hi friends, today let us discuss a multi-bagger stock in the renewable energy sector, specifically in solar energy. This stock was trading as a penny stock at rupees 10 per share not so long ago on April 1st, 2021 and is now nearly 2,500, a staggering increase of 76,000%. If someone had invested 1 lakh rupees in this stock 5 years ago, their investment would have been worth rupees 8.3 crores today. In the last 12 months alone, the stock has delivered a return of 1,200%. That means the price has increased 12 times since June last year. The company is Waaree Renewables Limited based in Mumbai. Waaree Renewables Limited is part of Waaree Group, which also includes two other firms, Waaree Energies and Waaree Technologies. Waaree Energies is the largest of the three and is India's leading manufacturer of solar modules. Waaree Renewables is a subsidiary of Waaree Energies and focuses on the EPC, that is engineering, procurement and construction projects in the solar sector. Waaree Renewables is project-centric while Waaree Energies is product-centric. Waaree Energies holds a majority stake of 75% in Waaree Renewables. Waaree Technologies, which focuses on EV battery manufacturing, operates independently of the other two firms of Waaree Group. While Waaree Technologies and Waaree Renewables are listed on the BSE, Waaree Energies is planning to go public soon with an IPO expected this year. It is important to note that more than 80% of Waaree Group's revenue comes from Waaree Energies, which is yet to go public. Less than 20% of the revenue is from Waaree Renewables. Waaree Technologies is still in early stages of growth, contributing less than 1% to the group's revenue and currently operating at a loss. I wanted to highlight these facts because it's crucial to understand where the group's focus lies in the near term regarding revenue generation. Despite Waaree Renewables contributing less than 20% of the group's revenue, the stock market remains extremely bullish about the two publicly listed firms, resulting in high valuation levels. In this video, we will do a deep dive into Waaree Renewables. We will do some comparison of its business with its parent Waaree Energies later. I will come up with another video analyzing Waaree Technologies in a week or so. Do note that for convenience, I will refer the name Waaree Renewables Limited as Renewables and Waaree Energies Limited as just Energies in this video. First, let us look at the financials for Renewables. The firm recently announced their yearly results for fiscal year 2024 and the quarterly revenue for the same fiscal year. The year-on-year growth was quite impressive, with the company posting a quarterly revenue of 273 crores. This represents a staggering 344% year-over-year growth from the 61 crores posted in Q4 of fiscal year 2023. The yearly revenue was 876 crores, which was nearly a 150% year-over-year growth from the 350 crores posted in fiscal year 2023. In Q4 of last fiscal year, the EBITDA increased to 75 crores from just 22 crores in Q4 of fiscal year 2023, marking a growth of 237%. The yearly EBITDA was 207 crores, a 147% increase over the 83 crores posted in the previous fiscal year. The profit after tax or PAT for Q4 stood at 54 crores, a 341% growth from 12.28 crores in Q4 of fiscal year 2023. The firm posted a yearly PAT of 148 crores, a 167% year-over-year increase from the 55.33 crores profit seen in the previous financial year. It is worth noting that there was a dip in revenue and profits from Q3 to Q4 in fiscal year 2024. However, the management maintains that this is due to the nature of EPC business, which can have a long execution cycle rather than a quarterly one. Although the company executed 230 megawatts of power in Q4 compared to 210 megawatts in Q3, the revenue posted can depend on the stage of the project and when the invoicing actually takes place. Therefore, some of the work completed in the last quarter may have their revenue reflected in the next one, that is Q1 of fiscal year 2025. When the firm is engaged in EPC projects, some quarters may see higher numbers, and that does not mean that execution has actually slowed in other quarters, according to the management. Now let us look at the valuation of Waaree Renewables Limited. The stock's PE ratio or price to earnings ratio is around 168 at the time this video is being made. It is clear that investors view Waaree as a growth stock and expect the firm's revenue and earnings to increase exponentially in the next year or two. The big question for Waaree is whether these growth expectations are justified and if the firm can live up to these ambitious projections. Let's find out. For a company to grow, the first requirement is a substantial market opportunity. The question is the opportunity big enough for renewables to achieve significant growth? To understand this, let's consider a few key facts. India plans to go carbon neutral by 2070 as announced by the central government. As part of this initiative, by 2030, India aims to meet 50% of its energy needs through renewable sources like solar and wind. Towards this goal, the government has outlined a plan to reach 500 gigawatts of non-fossil energy capacity by 2030, with 140 gigawatts coming from wind power and 230 gigawatts from solar power. India's present capacity for renewable energy is 142 gigawatts. Out of the total 142 gigawatts of renewable energy capacity, India currently has about 82 gigawatts of solar capacity. Despite having a 82 gigawatts capacity, the actual electricity generated is only about 15 to 20%, known as the plant load factor or PLF. This translates to approximately 14 gigawatts of usable electricity, considering the varying solar intensity throughout the day and year. This 14 gigawatts meets only about 5% of India's current energy needs. About 55% of India's energy needs are currently met by coal and gas. However, the costs of electricity sourced from these fossil fuels are increasing every year, while the cost of solar energy is decreasing. In fact, solar module prices have declined by almost 90% since 2010. Solar energy is now the cheapest source of electricity globally, making the switch to solar not just an environmental requirement but also an economic necessity. If 82 gigawatts of solar capacity currently meets only 4 to 5% of India's energy needs, we can imagine the scale of deployment needed to meet the future energy demands. India will need to add approximately 820 gigawatts of solar capacity to meet just 50% of its electricity needs from solar. Also, solar energy is not only used for electricity but also for producing fuel, such as green hydrogen, for future vehicles and manufacturing. This means we have only scratched the surface of solar capacity utilization, and there is a long way to go before solar capacity addition reaches its peak. Major solar players like Waaree have a significant amount of work ahead before the market becomes saturated with too many competitors. If India is to reach its renewable energy goals for 2030, we will need to see at least 50 gigawatts of tenders being issued for solar energy every year until 2030. In Q4 of fiscal year 2024 alone, project tenders totaling 18.3 gigawatts capacity were issued across 49 tenders, with 66% coming from central PSUs. The total solar tenders issued for the entire year amounted to 69 gigawatts. This rapid expansion of solar capacity is expected to continue for next 6 to 8 years. This represents a huge opportunity for EPC players in the solar space, such as Waaree Renewables. It is highly likely that Waaree, being the largest manufacturer of solar modules in India and one of the top EPC players in the solar industry, will secure a significant portion of this vast opportunity. As attested by the management, Waaree has the supply chain access, experience, and resources needed to deliver multiple gigawatts of solar energy deployments every year. Waaree Renewables is currently pursuing a bid pipeline of 13 gigawatts, engaging with about 26 to 27 customers. According to management, their success rate for bids is approximately 20 to 30%. Therefore, we can expect roughly 3 gigawatts of new orders in the coming months. The current unexecuted order book for renewables is 2.3 gigawatts as revealed in the latest annual report. Notably, nearly 80% of this, or 1.8 gigawatts, was secured in the last quarter, that is, Q4 of fiscal year 2024. This indicates that the company has been experiencing significant tailwinds in their EPC business in recent months. Management expects to execute about 1.8 to 2 gigawatts of orders in fiscal year 2025. They delivered about 704 megawatts of solar projects in the last fiscal year, generating approximately 876 crores in revenue. This translates to around 1.2 crores of revenue per megawatts of energy deployed. Management has confirmed that 1.1 to 1.3 crores is the average revenue per megawatts that we can expect in future as well. Based on this data, let us project the future revenue for this firm. Although the company estimates 1.8 to 2 gigawatts of execution in fiscal year 2025, I want to align my expectations with their performance in the previous financial year. In fiscal year 2024, Waaree was expecting to deliver about 900 to 950 megawatts of power, but the final figure was 704 megawatts. Therefore, assuming a slightly conservative yet optimistic figure of 1.5 gigawatts of delivery in fiscal year 2025 and an average revenue of 1.2 crores per megawatts, we can estimate the revenue to be around 1.5 gigawatts into 1.2 crores, which is 1800 crores. This is the estimated revenue for fiscal year 2025. The net profit margin for the firm was around 15% during the last two financial years. Hence, the net profit for fiscal year 2025 can be estimated as 1800 crores into 0.15, which is 270 crores. Given that the firm has a total of 10.4 crore shares, the earnings per share or EPS for fiscal year 2025 would be 270 divided by 10.4, which is 26 rupees per share. Since the stock is currently trading at 2319, the forward PE for fiscal year 2025 would be 2319 divided by 26, which is 89. This forward PE is still quite high. Even if we assume a highly optimistic figure of 2 gigawatts delivered in fiscal year 2025, the estimated revenue would be 2000 megawatts into 1.2 crores per megawatt, which is 2400 crores of revenue for fiscal year 2025. With a net profit margin or NPM of 15%, the profit would be 2400 crores into 0.15, which is 360 crores. The EPS would be 360 crores divided by 10.4, which is 34.6 rupees per share. The forward PE would be 2319 divided by 34.6, which is 67. 67 is still not a small number. Hence, if you invest in this stock at the current price, a healthy PE ratio for this investment, say 30, can only be reached by fiscal year 2026 and beyond. And this will happen only if the revenue and profits continue to rise exponentially. This implies that the company's revenue and profits would need to double every year for the next 3 to 4 years. To be precise, I have estimated that Waaree Renewables needs to deliver at least 5 gigawatts of solar power annually to justify the current super high valuation of the firm. How did I arrive at this number, that is 5 gigawatts that renewables needs to deliver every year to justify its high valuation? Let's break it down with some calculations. If Waaree executes 5 gigawatts of projects annually, the annual revenue would be 5 gigawatts into 1.2 crores per megawatts, which is 6000 crores. Assuming a net profit margin or NPM of 12%, the annual earnings would be 6000 crores into 0.12, which is 720 crores. With 10.4 crore shares, the EPS would be 720 crores divided by 10.4 crore shares, which is rupees 69.23 per share. Using the current stock price of 2319, the forward PE ratio would be 2319 divided by 69.23, which is 33.5. This forward PE ratio of 33.5 is close to the industry PE of around 34. This is the PE that we were aiming at. You now see how I arrived at the figure of 5 gigawatts of EPC projects needing to be delivered annually for renewables to justify its current valuation. If anyone knows another way to value this firm, or if I'm missing something, please let me know in the comments. Now the question is 5 gigawatts of annual execution achievable? Even if it is achieved in a year, is it sustainable? Let's find out. To achieve 5 gigawatts of delivery, renewables unexecuted order book needs to be in the range of 7 to 8 gigawatts, considering the fact that typical execution cycle for EPC projects is around 12 to 18 months depending on the complexity. Assuming that about 70% of the order book can be executed within a year, a 7 gigawatts order book would result in approximately 5 gigawatts delivered annually, which is what we are aiming at. Maintaining an order book of 7 to 8 gigawatts may involve about 30 to 40 customers and meeting their unique requirements. 5 gigawatts of execution requires about 25,000 acres of land every year as per my estimates. Remember, this is not a single project but multiple EPC projects executed for about 30 customers spread across multiple locations and demographics. Getting approvals, navigating land acquisition regulations, and dealing with multiple stakeholders can be time consuming and complex. There are other big challenges as well. Supply chain management, ensuring a steady supply of high quality solar panels, inverters, and other components, and efficiently transporting materials to various project sites across the country. The service provider needs to ensure adequate grid infrastructure to support the integration of these large-scale solar projects. We may need to build additional transmission capacity by upgrading transmission lines to handle the increased load from the new solar installations. Then there are technical and operational challenges of maintaining a skilled workforce for designing, installing, and maintaining solar projects. Multiple projects need to be managed simultaneously, ensuring timely completion and adhering to quality standards. We need to manage costs effectively to ensure profitability, especially with fluctuating material costs and potential delays. Financing large projects with multiple clients requires significant upfront investment. Securing financing from banks, investors, and financial institutions can be challenging. Managing receivables can be complex, involving a combination of clear invoicing practices, diligent follow-ups, and robust contract management. The reason I'm explaining this in detail is because it can be hard to put your foot on the ground and understand the complexity of managing growth for a firm like Waaree Renewables, handling EPC projects in the solar sector. And we have not even talked about the competition that firm faces. The market share of renewables in the solar EPC business is about 5%, and it faces stiff competition from many big and small EPC players. The big and established players include Tata Solar, Adani Solar, Vikram Solar, BHEL, and KPI Green Energy. Some of them have a bigger market share than renewables in the EPC segment. The stock price may have skyrocketed, expecting the firm to grow exponentially, but are these investor expectations for renewables realistic and reasonable? In the long run, can this growth be maintained for the kind of business that renewables is engaged in? As I explained earlier, we need the execution of about 5 gigawatts of solar EPC projects every year, and that in my opinion would be challenging even for companies of Waaree's scale. Remember, this number is 7 times the 704 megawatts of delivery we saw in fiscal year 2024. Hence, the revenue and profits of the firm needs to grow 7 times the current figure and maintain the same every year. It will be a big challenge to live up to the current valuation, considering the fact that EPC services in the solar sector are challenging, as explained just now. In other words, it will be difficult for any player to sustain the growth expected to justify this valuation. Okay, that begs the question, if this is the reality, then why are shareholders so bullish about this firm? I think I may have an explanation for this. Part of the reason why investors are bullish is perhaps because of the confusing messaging from the Waaree management. As I mentioned earlier, Waaree has two entities, Waaree Energies and Waaree Renewables. While Waaree Energies is engaged in manufacturing solar cells, solar panels, inverters, mounting equipment and other products for the solar sector, Renewables handles the EPC projects and operations and maintenance for solar deployments. No doubt the growth potential for Waaree Energies is huge, and part of the investor sentiment for renewables is derived from the potential they see in the energies business. However, these are two separate businesses with their own unique set of challenges. Since Waaree Energies is yet to be listed, the enthusiasm for Waaree Group gets reflected in the stock price for renewables. I have seen several growth milestones of energies being mentioned in the renewables annual report, which may have led investors to believe that the subsidiary firm is on a growth path with plenty of opportunities. The annual report starts with listing big numbers like 12 gigawatts of module capacity, 6 gigawatts of modules supplied globally, 5.4 gigawatts of solar cell capacity, 10,000 plus projects completed in pumps, telecom and rooftop, among other things which are mostly related to energies business. Next, Waaree's impressive portfolio of products and services is presented. However, do note that the renewables business benefits from only one in this portfolio, EPC services, while the others are mostly part of Energies firm. By investing in renewables, we need to understand that we are only investing in the services business of the Waaree Group and not their impressive manufacturing business. As I said earlier, less than 20% of the revenue earned by the Waaree Group comes from the renewables. We should not assume that all the growth waiting to be seen in energies business will automatically translate into similar growth for renewables. For example, if tomorrow Waaree Group becomes a dominant player in the fast-growing solar rooftop business, with about 1,400 plus franchisees already in place looking for customers, will it bring additional revenue for renewables? Probably not, because renewables is mostly B2B and is involved in executing large orders, often in megawatts or large kilowatts. Although the annual report mentions 50 plus megawatts and 10,000 plus projects accomplished with franchisees' help as an EPC accomplishment, I doubt the revenue earned through franchisees is reflected in renewables. As I said earlier, renewables is listed as a B2B, involving bigger power projects, while these rooftop installations are mostly B2C, sold to average consumers like you and me. Then the annual report mentions green hydrogen as a new business opportunity for renewables. They are reportedly helping a business set up a green hydrogen manufacturing plant. Also, the firm is open to collaborating on establishing electrolyzer manufacturing units. This is again a grey area. Should this be part of manufacturing, which is what Energies does, or should this be seen as a services business? Let me know your opinion on the comment section below. Clear communication from the Waaree management on the separation of business activities between energies and renewables would help in better evaluating the investment potential. Therefore, apart from the word of mouth and branding benefits, Waaree Renewables may not directly gain from Waaree Energies becoming the major player in the solar industry in India. The growth trajectories for Waaree Energies and Waaree Renewables are not directly proportional. An increase in revenue for one does not necessarily result in equivalent growth for the other. The point I am trying to make is, do not mistake the potential growth of Waaree as a manufacturer with that of a service provider. In my opinion, the present valuation of renewables is very high and hard to justify. Hence, I would stay away from investing in Waaree Renewables at present unless the PE drops to at least 75 or below. I believe that once the Energies IPO is completed, renewables will be pushed to the background and probably drop to more realistic valuation levels. Investor focus will likely shift towards the core business of Waaree, represented by Waaree Energies. Waaree Energies should be a safer bet, and the stock is expected to perform well as our country pursues its ambitious goal for the green energy. The advantage you gain by investing in Waaree Energies is that even if renewables sees fantastic growth in the future, that growth should be factored into the stock for Energies, since it is the parent company with a 75% stake in renewables. The revenue of renewables should show up in the consolidated statement of Energies business. Additionally, by investing in Energies, you benefit from the much larger business of Waaree Energies, which is their core business. This includes their established manufacturing operations, producing solar cells, panels, inverters, and other key components for the solar sector. Investing in Waaree Energies provides exposure to both steady growth of their core manufacturing business and the potential upside from the growth in renewables. Waaree Energies has been in business since 2008. With favorable government policies, it can see multi-fold growth in the coming years, the kind of growth that investors are hoping for in renewables. Though a major portion of Energies revenue comes from exports, domestic shipments are expected to pick up speed in coming days. The IPO was supposed to happen last year, then in Jan of this calendar year, but it got delayed and it's still pending. It is supposed to happen anytime soon. I will prepare a separate detailed video on Waaree Energies when we see some progress on the IPO issue. One last thing that stumps everyone looking at renewable stock. Why no institutional investor is interested in this stock? At present, if you are invested in Waaree Renewables, it's just you, the public investor, and the promoters. Institutional investors might be waiting for the IPO of Waaree Energies, which could provide a more attractive and potentially less risky investment opportunity. That's it for today. Let me know your thoughts and hit the like button if you find this video useful. Thanks for watching. Have a great day.